What is up, everybody? It's Joe here, budgetboss.ca. It is April 20th. It's Monday. It's the 21st day of the COVID campaign for financial awareness. Today, I'm going to be talking about disability insurance. So first things first, happy 420 to all of you people out there who enjoy this day as your sort of national holiday. Enjoy it responsibly. Don't gather in the park. Make sure you're social isolating. But we live in Canada, and the green is legal now, so enjoy it if you are able to. And make sure you order online and support your local businesses. I personally don't like to smoke marijuana, but for me, I'm happy that people can use it for what they choose, and I'm glad we're legal. And I'm wearing my Bob Marley t-shirt in honor of 420 today, so everyone can enjoy respectfully and make sure they have their happy national holiday, which I personally don't celebrate, but good for you. Maybe it'll take your mind off all this isolation. So today I'm going to get into disability insurance, and disability insurance is super important. The reason being is because the majority of us will experience some sort of illness or injury during our lifetime that will make us miss work. Sometimes they're more serious than others, but 1 in 2 people will become disabled or injured in their lifetime or become sick in their lifetime. It will cause them to miss work or school. So making sure that you have that sort of coverage to keep your monthly bills in order is massive. Now, the one thing I will show you tell you right now is that this coronavirus has actually exposed how difficult it is for all of us to survive on less income than we make on a regular basis, or no income. And people are dipping into savings. People are running up debt right now, struggling, waiting for government benefits to come in. This is why making sure you have adequate emergency funds, adequate savings, and adequate insurance coverage moving forward. It's so important, because this actually moment right now is showing us what can happen if we don't have money coming in. And I think it's prudent time for us to start thinking about getting our coverage in order and thinking about all the aspects of our financial plan that could come into play, especially at a time like this. And moving forward, it might not be a virus that gets us next time. It might be something personal to you, such as an injury or illness. So today I want to focus on disability insurance. I've already talked about critical illness insurance, which is another part of the living benefits program to help top up your income should you get hurt or sick. So let's look at disability insurance. But first things first, check out the markets. So I want to take a look at the markets today. We got a mixed bag today, a little bit down in the Dow Jones and S&P in New York. NASDAQ and the TSX in Toronto are both up. There's slight down in New York and slight up in Toronto and the NASDAQ. This is a mixed bag of worms. Looking earlier in the day, the futures market stated that we would be opening down quite a bit, and we started off, but the TSX has battled back and the Dow Jones has battled back slightly from its opening mark, where it's down about 500 or so to start the day. Right now, it's about 1 p.m. So we are looking to hopefully have a positive day, or even get back to the even mark for the Dow and S&P 500. So those two indices are down. The NASDAQ and S&P in Toronto are both up. So again, what we're doing is making sure that our risk tolerance and time horizons are followed correctly. We're not making moves unless we have a long time horizon, or we understand the implications of the move that we're making. The market should battle back as things start to ease into isolation mode being let up, the quarantine being let up, and then we can get back to our regular lives. Obviously, the government's jumping in with stimulus packages right now for businesses and individuals. So certain businesses are up, grocery stores, Amazon, obviously, anyone that delivers anything. Other businesses, or the majority of them, are down right now. So we're going to start to see earnings coming in from across North America, and first quarter earnings are actually looking pretty dim for most retailers and most businesses. So that could affect the market. It could see a slide. But if you look at what happened earlier in the coronavirus timeline, markets dipped massively, and that was based on the fear that earnings for this quarter would be terrible, which they probably will be. So that could be baked into our market levels right now. The losses from earlier last month, so maybe mid-March, where we saw massive declines in a short short period of time. That could be the market's baked in these losses, and we're just starting to see them actually settle out as we start to see the economy open up again slowly but surely. So mixed bag of worms here with the markets today. Toronto is up though, which is good because they started the day down 300 points. So we are back in business. So I want people to also download the combo expenses worksheet. I mention all the time. People are downloading it by the hundreds. I have sent off hundreds and hundreds of these worksheets. It's a great way to get your budget organized during this period. Also check out coronavirus support from the government Canada. If you qualify for it, make sure you apply on a monthly basis. Also understand that this benefit is taxable, so it's going to add income to you on the year. Now chances are your income went down if you're only receiving the $2,000 a month. Some people went up, but make sure that you're prepared for the tax situation that will arise next February and March, because you will have to pay a bit of taxes. So if you can, set a bit aside right now for that period next year, because this is not being automatically deducted from you like your paycheck normally is. So I want people to also check out how to retire relevant step 4 insurance. And I talk about disability insurance and critical illness insurance in here. It's an important part of your financial planning package, making sure that you have your income protected, because everything comes from your income. Everything. If you cannot pay your bills, then your whole financial plan just falls apart. You're not saving money, you're not paying for insurance, and you're not living your regular life. This post is one that I created in 2018, just over 2 years ago. Could you survive on less than half your income? And in this, I explain about disability insurance and what it is. So what is disability insurance? Disability insurance provides you with a monthly income should you get hurt or fall ill. The durations of the payments is a set amount of time and begins after a standard waiting period. Now, the waiting period is usually 30, 60, or 90 days. Oftentimes, it's 120 days. So, if you get hurt or injured, it doesn't pay out the first day. What it will do is often wait to see if you can actually come back to work during that time. Now, what does pay off in the first day is employment insurance. So, employment insurance, you will have to wait for that, but it will back pay you from your first day. And usually, disability insurance kicks in right when employment insurance ends, and that's around the 4-month mark or the 90-day mark. Employment insurance is 16 weeks, whereas disability insurance usually kicks in around the 3rd month or the 4th month, right when employment insurance drops off. So this is the option for most insurance coverage, or most disability insurance coverage. You can receive a maximum of about 80 to 85% of your earnings. This is so the option of not working is not more attractive than the option of working. They're not going to pay you 100% of your income to be disabled and not work, because then at that point there'd be no incentive for you to come back to work. So this is government legislated. You can have income coming from multiple places while you're disabled. This includes your employer, the government, or your own personal coverage. In order to qualify, you must have documented proof of your ailments, so your doctor must actually sign off on your disability coverage to get you that claim. If you cannot perform your specific job, that is the key feature of it. Most disability plans will actually only pay out if you can't perform any job. So I'm going to get into the definitions of that in a little bit, but higher occupation levels, if you cannot perform that job, like for instance a dentist, if you cannot be a dentist, it will pay out. But as certain occupation levels, they're not going to make a dentist go work at Walmart if they cannot do their job as a dentist. DI coverage is extremely important because while your income may stop, your monthly expenses certainly do not. Understanding your coverage is very important as well. Most people have coverage through their workplace, and oftentimes it can be confusing and they don't really understand exactly what they have. So missing work is very expensive, and we all understand that right now, where all of our incomes for the most part are on a decline, or our expenses have gone up, or our life is shifted right now. So what we need to understand is that missing work is a huge detriment to your financial plan. You got to make your bills on every month. Protecting your income is important because most people either go into debt or deplete their assets or savings when no money is coming in. This can mean not achieving your retirement goals. Losing your retirement funds is extremely detrimental because the tax implications from withdrawing from, say, an RRSP, Registered Retirement Savings Plan, or the loss of compounding interest because you took money out of that. So that's a huge one right there when people actually go into their savings to cover off a disability. Government benefits don't pay you that much. That's why personal coverage is huge. 55% is your employment insurance. And again, it only lasts for a certain amount of time. You'll get 15 weeks. CPP disability will only cover you. This is Canada Pension Plan Disability Act. It will only cover you if the injury fits their definition of severe and prolonged. And it's very tough to fit that definition. Severe and prolonged. So that sounds very vague. It's very tough to fit their definition of severe and prolonged injury or illness. Same is true of workplace coverage. It often falls into 50 to 65% of your income range. This is if your workplace has coverage at all. So most workplaces do have some form of coverage, but a lot of them don't, especially if you're working as like a lower level worker or a place that's a small employer. They won't provide coverage often for their employees because it's an expensive form of coverage, disability insurance coverage. Reasons why you should not get DI, disability coverage, and I'm going to call it DI from now on just to save me for saying that. If you don't qualify, if you don't qualify for DI, it's huge. I mean, I personally would not qualify for DI because I have a chronic illness. So if you do not qualify for DI while you can't get it, that's a huge one. Now it's incumbent on you to look for a workplace that provides you with some form of coverage because they do not medically underwriting it. If your workplace covers you adequately, now this is rare, most workplaces don't. Most people cannot survive on 60 to 65% of their income. So in my opinion, 65% is not an adequate form of coverage. But if your workplace happens to cover you more, then getting DI coverage on your own would not be worthwhile. You can't afford it. So here's a one thing too. DI is often more expensive. The reason being is because you're more likely to claim on it, or you're more likely to get hurt or sick or ill, and that's why it is often more expensive. So it may not be a priority compared to other things in your life that are going to be taking up your money on a monthly basis because you got to pay your bills and you got to look at taking care of your family. Is it worth it? The big question. Yes, I think so too. A major reason people do not reach their retirement goals is that they've experienced traumatic injury or illness in their lifetime. Having this form of coverage does not make you rich. All it does is it allows you to get through your month, get through and continue on with your financial plan. It's not for people who are looking to milk the insurance company. If this is your goal in life, I would look elsewhere because first of all, you're probably going to get caught. Second of all, it doesn't pay you as much as you would think it would do. Much like life insurance, the peace of mind alone is worthwhile in my opinion. So I'm also including in this post today a MoneySense article on what you need to know about disability insurance. But the best guide I found online is actually from a gentleman named Brian So out in Vancouver, British Columbia, Canada. And he gives a pretty definitive guide on disability insurance. It's very thorough, and I was quite impressed. I went digging and trying to find an online resource that would show it best, and Brian actually does a great job. So why do you need disability insurance? So Brian gives some statistics here. It says, did you know 1 in 3 people become disabled for 90 days or longer before the age of 85? Or age of 65, I'm sorry. 1 in 3 people, that's quite a bit. And when a disability lasts longer than 90 days, the length of disability averages between 2.1 and 3.2 years. So could you imagine going 2 years without income or 3 years without income? That's huge. Another one is that over 1 billion people, or just about 15% of the world's population, actually live with a disability, right? So that's another one too. Like a lot of people are actually living, working, and dealing with disabilities on a regular basis, and it affects their lives. Canada, the percentage is even higher. 22% of the population aged 15 or older live with a disability. That's massive. They have a huge impact on people's personal finances. 28% of people from age 25 to 65 with severe disabilities live below the poverty line. That's insane. Living below the poverty line because of health reasons. And this is a huge, huge thing, and I see it every day. I want people to truly understand what health means to their personal finances. 48% of Canadians are not financially prepared to be off work. 76% say it would be stressful for the entire household. And 31% said their able partner had to find extra work just to make up the difference because of their disability. So this is pretty wild statistics, and most people don't actually understand how the health and how disability impacts them. Now, we always, what I find is in the disability insurance industry, they always use the goose that lays the golden egg, right? So if you have a goose that laid a golden egg, and every day you could go and collect one golden egg, and this golden egg you could go there for sell or store or actually use to make yourself wealthier. The first thing you should do is actually insure the goose, right? So what would you insure, the goose or the eggs? Insure the goose. The goose is the producer. Most people will choose the goose. If something were to happen to the egg, they can always lay another egg. But if something happened to the goose, you could say goodbye and the golden eggs are done always, right? So this is the scenario that most people feel. The golden egg is your ability to earn an income, and you're the goose. You need to insure the goose to make sure that money keeps coming in. And this analogy, goose that lays a golden egg, is a perfect one to speak about disability insurance. The next part I want to discuss here is actually waiting times and elimination. So common waiting periods are 30, 60, 90, 120, 180, 365, or 730 days. The shorter the waiting period, the more expensive the policy itself. So that's something that people need to understand. If you get a shorter waiting period, that means that you're injured for less time and therefore it pays out quicker. That means your policy a bit more expensive. The longer the waiting period, the less expensive it would be. Oftentimes, when you see the 180, 365, and 730 days, these are business arrangements that if this person cannot work that long, then it pays out afterwards, and then the business arrangement falls apart. The typical ones are anywhere from 30 to 120 days. So 30, 60, 90, 120 days. So this is why you should have an emergency fund to cover you during this waiting period. The sweet spot is about 3 to 6 months. So if you can actually have 3 to 6 months savings, you could cover yourself during this period. Make sure you're paying your bills until your insurance kicks in. And that's a huge one. And this is why emergency fund and budget, I talk about it so much, because everything in our life revolves around making sure we can cover off short-term gaps, because the long-term things, when they kick in, oftentimes we're missing that short-term gap. And this is case in point of what we saw last month. People missed one paycheck and were already decreeing that they couldn't pay rent or couldn't pay their mortgage. One paycheck in the month of March, and people were saying, I cannot pay my rent. I'm talking about rent strike. I need a mortgage deferral. So you see how people are living on the edge. Now imagine if you had to wait 30, 60, 90, 120 days and you had no emergency fund. Or imagine this, you had no disability insurance at all and you didn't work for 2 years because you're disabled. So that's huge. So make sure you actually have that emergency fund in place. And I talk about that all the time, and I have posts and whatnot to help you build that emergency fund. The next thing I want to talk about is occupation classes. So depending on what job you do, it categorizes you in disability insurance and where exactly you fit. So certain things, obviously, certain jobs that you have, obviously have a greater risk of being injured. For instance, if you're a construction worker, you have a greater risk of being injured than, say, a doctor. Or if you are a roofer, you have a greater risk of being injured than, say, an accountant. Makes sense, right? So I will go through these occupation classes. 4A, these are occupations with the lowest risk. Most of these occupations require a significant amount of post-secondary education. They're in fields where disabled individuals are more motivated to return to work because their income is higher. Obviously, if you're making $250,000, $300,000 a year, it is not your goal to collect very little on employment insurance. You want to make sure that you are actually making your income, and your job is obviously less strenuous physically, so you can return to work. And the thing is, with disability insurance, it'll be kind of expensive because they're paying out a higher benefit per month, because oftentimes you make more money. So examples of 4A occupation classes are accountants, architects, computer programmers, doctors, dental specialists like dentists, dental hygienists, obviously, engineers, judges, lawyers, optometrists, pharmacists, professors, and veterinarians. These are people in the medical or educational fields usually, or law, or people in business related fields in some way. 3A, this occupation class requires little physical exertion other than the effort expected in clerical or similar non-hazardous work work sites or workplaces. So most white collar workers fit into this occupation class. So you're looking at assistants, administrative assistants, bank tellers, clerks, librarians, mortgage brokers, occupational therapists, opticians, paralegals, photographers, physiotherapists, business owners and executives who only perform office duties, chiropractors, travel agents, teachers, and speech therapists. So this is a 3A occupational class where it's mostly white collar workers. 2A, it can often include specialized workers who don't qualify for the 3A. The degree of risk or physical activity is higher than 3A occupations. 2A also includes sales, most of the sales and supervisory occupations. So this includes acupuncturists, car salesmen, commercial realtors, computer technicians, florists, health inspectors, home inspectors, midwives, registered massage therapists, registered nurses, parole officers, reporters, salespeople, and social workers. So this one has a bit more risk than, say, the 3A occupational class. Oftentimes these people are out in the field wherever they may be, so it could be out visiting clients or something along those lines, or dealing with the general public, which in turn means a greater risk of injury, whereas the 3A occupational class is usually an office setting. And then the A occupational class. So this often includes skilled manual laborers and people in lighter trades. So unskilled manual workers where duties and light working conditions are favorable also belong to this class A. Extremely hazardous working environment, heat, chemicals, explosives, heavy equipment, machinery must be absent to qualify for A. So these are people who have more of a strenuous job, but not necessarily a dangerous job. So this includes bakers, bus drivers, by law enforcement officers, mechanics, chefs, dental assistants, dental hygienists, dog trainers, driver instructors, electricians, musical teachers working away from home, plumbers, property managers, registered nursing assistants, residential realtors, servers, and unarmed security guards. These are often people who can find themselves unemployed at certain times, so that's why they're included in it, and that would include, say, residential realtors and music teachers working away from home. So that would be the reason why they're including that, because with disability insurance, there's two aspects of it. It's the job itself and your personal health. So it's important to understand that. So B occupational class is people that work in jobs that require heavy physical exertion. So this can involve a considerable amount of risk and a high rate of absenteeism, and you can see why these ones would be more expensive. So you're going to have security guards, barbers, hairdressers, bartenders, carpenters, cleaners, janitors, contractors, drivers, drywallers, estheticians, firefighters, obviously dangerous, garbage truck drivers, forklift drivers, paramedics, personal trainers, police officers, roofers, swimming instructors, and yoga instructors. And then there's a group of people who do not qualify, and these are obvious because they work with hazardous materials or they have a high level of instability in their job. So you would figure air traffic controllers, actors, artists, athletes, authors, bodyguards, chauffeurs, daycare operators in their own home, school bus drivers, ski instructors, singers, tattoo artists, taxi drivers, undercover police officers, and video game players, I guess, if that's your job. So you see how it can vary in different occupational classes. Obviously, the greater the risk on you becoming injured, the more expensive your policy will be. Or the greater benefit it can pay out, the more expensive your policy will be. So the next part I want to get into on Brian's post here is definitions. So own occupation. You'll often see it said as own OC or reg OC. Own OC means that you're considered totally disabled if you cannot perform the important duties of your job, your personal job. So as a dentist, you cannot perform the duties as a dentist. Regular occupation means you're considered totally disabled if you cannot perform the important duties in your regular occupation. So this means that any job similar to yours, you cannot perform the duties of. Now, with regular occupation, that often means that you can go do something else within that role. So, for instance, if you cannot be the manager at your warehouse, you can then therefore be a clerk in the office at the warehouse. So you would do something else. Any occupation means that you cannot do any job. So within your own workplace, if you get hurt, if you cannot perform any job, then it would pay out. So this is if you're completely, totally disabled, where you cannot perform any job or cannot go back to work in that situation. And that those three definitions, it's very important to understand. Most fall under the regular occupation or the any occupation. It's when you're in the higher level of sort of jobs like doctors, dentists, professors, lawyers, that you'd have the own occupation. And this is where you could actually still continue working, just not at the job you have. So oftentimes a dentist will become a dental teacher or a professor and teach people how to be a dentist or something along those lines. The next part I want to talk about is riders that exist within disability insurance. So you can add on other features, and they will obviously cost more money. It's like buying a Toyota or buying a Cadillac. So disability insurance policies are often very dynamic and very versatile. So you can add on multiple features and actually amp up your policy to cover you in various different ways. The own occupation classification that I just talked about a second ago, you can add on that rider, but it'll obviously cost you more to not be able to work at your own personal job as opposed to any job or a regular job. This rider upgrades the definition to own occupation. The regular occupation extender. So if the regular occupation period is only 2 years, so for instance, if you get injured and the regular occupation, so you cannot do your job. So for 2 years, though, if you cannot do your job for 2 years, they will make you do some other job. You can extend it with this benefit, usually up to 5 years or to age 65. This is a big one, cost of living adjustment. Obviously, if you're getting paid $2,000 a month from your disability policy today, if this is extending to age 65, $2,000 right now does not equal $2,000 10 years from now. So the cost of living adjustment, it actually keeps up with the Canadian index of inflation. So a flat benefit often isn't enough to keep up with inflation. This rider, the benefits are indexed to inflation every year you're on claim. At an inflation rate of 3%, your original benefit would double after 24 years on claim. So if you're, say, 30 years old, after 24 years, your benefit would double. So that one's a huge one. Cost of living is obviously an important one. Future insurance options. So this rider allows you to get more benefit or more insurance without doing a medical evidence of insurability. So you don't have to go through the underwriting process again to see if you qualify for more insurance. So for instance, right now, if you have $2,000 of a monthly benefit, should you get hurt or sick, over time, you could add more insurance onto that without having to prove insurability and not doing a medical. Residual or partial disability. Some policies don't have these benefits built in, so you can add them. So even if you get partially disabled and you can only work, say, 3 days a week as opposed to 5 days a week or 2 days a week instead of 5 days a week, it will help you. The next one, return a premium. That's a big one. This one's useful for business owners or anyone who really feels that they want to return on their income if they don't make a claim. So this rider refunds half the premium paid if you don't make a claim. You get the refund after 7 or 8 years after your policy is in effect, depending on the type of policy. So there is in the fine print when this refund will come back to you and the amount that will come back to you, but it's usually half the premium, usually around 7 years, and by paying a little bit more, you get your money back should you not make a claim. That's a huge one, right? So these riders are super, super useful to actually make your policy customized to what you want. In terms of underwriting, again, there's two parts of it. Financial underwriting, you have to prove your income. So if you can prove your income, because the disability insurance will only pay you up to 80% or 85% of your income, you have to show exactly what your income is. So financial underwriting is one aspect of it, and then medical underwriting. Now, medical underwriting with disability insurance is vastly different than life insurance, and the reason being is you're more likely to claim on the disability insurance. The odds of you dying are less likely than the odds of you getting hurt or sick. Makes sense, right? So mental health, back and neck disorders are the leading cause of long-term disability. So you'll be looked into to make sure that you are actually physically and mentally capable of fulfilling the disability insurance contract. So that is the post that Brian So has. It's a great, great post, and I commend Brian for making such a detailed analysis of disability insurance. So I'm going to include that post in the post I have here that I'm sharing on YouTube, Facebook, IGTV, as well as Twitter and LinkedIn. So I want people to check that out. Also check out the MoneySense article about what you need to know about disability insurance. For me, I wrote my post on how to retire relevant step 4 insurance, and in this one, I talk about life insurance and I talk about other essentials form of coverage, income replacement, disability and critical illness coverage, and how it pertains to you getting to your retirement goals. Very, very, very important part of your personal financial plan and achieving your retirement goals. I want people to also check me out on Facebook. This is the place where you can actually get most of my links and most of my resources that I'm sharing with people. Again, I'm also on IG. IGTV is where these videos are because of the length of them. And then Twitter, and the whole catalog is located on YouTube. At Joe Budget Boss is the actual contact. You can also reach me via email at joe@budgetboss.ca, or you can shoot me a DM on the various platforms. And you can contact me on my website, budgetboss.ca/contact, where I share all these resources, over 400 different articles I've written on personal finance over the past 3 years since Budget Boss has been in place. Let's take one more quick look at the markets before we disappear. TSX has gone down, and so has the Dow Jones since we first started this, so in the past half hour or so. So hopefully we get to a point where we are even on the day, but we did have a pretty good week last week, anywhere from 1% to 3% gains on all the major indices. So let's see if we can keep that run going and actually get back some of these losses that we lost last month. So one thing I'll say for sure is that we've lost about 38% at its market low when the coronavirus pandemic got into place and started panicking everyone. Since then, we've gained about 18 to 20% more. So we're still down about 15 to 20% on all the major indices, but we are chugging along, hopefully getting back to that even point at the market highs. And as we reopen the economy and practice our social distancing, we can hopefully get back to a spot where everyone's retirement accounts are looking nice and plump like they used to. But the main factor is do not jump and make rash decisions while you're at this without the help of an advisor. My line's always open for this. So this was my analysis of disability insurance. It's a very complex subject, so I want people to understand. Look at Brian So's guide on this, because I haven't found a more definitive guide on disability insurance on the internet. It's a great, great guide. He's out in Vancouver. Shoot me a message if you're interested in talking about it as well. Disability insurance is a perfect play for business owners who want to make sure that should they not be able to come to work, they can have their business covered, and anyone who needs a top up from their current workplace plan. If you have questions about your workplace plan and how it covers you and what a top up for you might look like, shoot me a DM or shoot me an email at joe@budgetboss.ca, and I'm more happy to analyze your workplace coverage and see if it fits you the way you want to be covered. So that's my post for today. Join me tomorrow on day 22 of the COVID campaign for financial awareness, and I hope you enjoy yourself.